Thank you so much to everyone for hopping on this leg of our FinTech Connect Summer Series. We have Seth Brickman of Ranqx. We are a proud partner with Ranqx. We love their platform. So Seth, go ahead and the floor is yours.
Awesome. Thank you, Amy, and welcome everybody. Again, my name is Seth Brickman. I'm with Ranqx. You may know me from my previous role where I was the CEO of Qcash Financial. And prior to that, I was head of product at Amazon and led software innovation for Microsoft. But very passionate about technology, but technology in the credit union in the credit union space. And that's why I'm so excited to be able to share with you today about Ranqx. Now, not often do I agree with the CFPB, but in this one statement, I feel like they have captured the heart of Ranqx. And what they say is small businesses are the engines of growth in our communities, driving wealth creation and upward financial mobility. When small businesses succeed, our economy is stronger, more equitable, and more resilient. And I think if you're a credit union on this call, you kind of have to agree with that statement because that's why we exist. We're people helping people. We're impacting our communities. And in fact, that's actually how Ranqx started. So Dave Lewis, who's the founder of Ranqx, his father went to the banks for a small business loan. They were declined by every bank. He went to, this is in New Zealand, a credit union or what they call cooperatives. And the credit union gave him the loan. And because of that, he was able to start Lewis Windows. Lewis Windows now has been around for 30 plus years. They employ hundreds of people in the community, and they make a huge difference in driving community prosperity. And so our whole basis and starting point starts with credit unions and small business lending. I did see a chat come through. Not sure if it's a question.
Oh, you're all good.
Okay. And so, of course, no company can do it alone. And so we have incredible partners like Visa, Michigan State University, Federal Credit Union is one of our largest investors, as well as a user. Washington State Employees Credit Union just invested and signed a contract with us to go live. People's Advantage Credit Union is going to be investing and going live on our product. And then, of course, we partner with MBC, Michigan Business Connections, Circle, Reseda Group, and of course the CCUA. So couldn't do it alone. We definitely love our partners. But here's the actual problem that we're solving. And we love the way Deloitte put it. And we always want to bring in independent thought. So Deloitte says not one traditional US financial institution has the ability to provide a straight through loan application. And really what they're saying there is from application to decision, there is no digital, straight through, frictionless, seamless way for a small business to get a loan. And then you partner that with the Federal Reserve study that showed 31% of small businesses received the funds that they sought in 2021 compared to 51% in 2019, and that number was even lower in 2023. And so you can see, not only do we make it hard to get a small business loan, but the outcomes are also to where small businesses are not getting the working capital funds that they need. And that's really important because there's actually $5.2 trillion of unmet capital needs in small businesses. 52% of small businesses today are using alternative lenders like Cabbage and OnDeck. And this one is the one where I think we have opportunity, and that is only 8% of small businesses today even consider a credit union for a loan. And because credit unions processes for small business loans are typically very manual, it costs on average $1.5 to $4,000 to process each loan. And where that becomes a really important number is on average, the NCUA shows that credit unions are rejecting or declining 70 to 80% of all small business loans. And if you're putting in that kind of a cost and you have that high of a rejection rate, you can see how using technology can make a major difference, not just in your costs, not just in the member experience, but actually in the overall productivity and then profitability of your credit union. So small businesses, why are they important? Because they're 64% of net new jobs. They're almost half of the entire workforce, and they're almost half of the total US business revenue. So when we're able to provide working capital loans for small businesses, we're able to make a difference in the community, drive community prosperity, and make our community stronger. And that's really the core message of Ranqx. So where are small businesses getting their loans today? Like we talked about, they're getting them at large banks and they're getting them at online lenders. And you can see credit unions are about 8%. Now, the other piece that's really important here is not only are credit unions only 8%, but it's the breakdown of their portfolio. So if you look at the bottom right slide, you can see that the banks right now are about 50-50 commercial real estate and working capital or non-commercial real estate loans. Credit unions are 93% commercial real estate and 7% working capital or non-commercial real estate loans. And that's where Ranqx comes into play. We're not only going to make it easier for you to do those non-commercial real estate loans, we're not only going to make it better for your members to have a seamless, frictionless experience, but we're going to do it in a way that reduces costs and makes it a manageable, profitable process for you. So you can see the change from 2019 to 2023. Large banks grew and credit unions stayed pretty flat. Now, one thing to note when you remove the real estate loans from the view of loan amounts, then you're talking about loans between 25 and 60,000. Sometimes they go over 100, but for the most part, the average small business working capital loan is 25 to 60,000. So they're not massive loans. And what do they need them for? Well, they use working capital to add staff, add inventory, do marketing, expand, lines of credit, and then, of course, business credit cards. And so what does Ranqx actually do? Well, we have digitized the entire process. So in our work with credit unions, we have found that from the time a small business puts in an application to the time that there's a decision, it typically takes about 2 weeks. And the reason it takes 2 weeks is the application comes in, it goes to a loan officer. That loan officer then needs to run business credit, run personal credit, get financial documents, get tax documents, manually calculate a bunch of different ratios and calculations, do KYB, KYC, business matching. And all of that takes quite a long time. And then the longer it takes, of course, the higher the cost. And then underwriting, the ability to then take all of that and then put it into the credit union's underwriting criteria and come up with a decision. The beauty of what Ranqx does is we take that origination and underwriting process, we have completely digitized everything, and we take that process from 2 weeks to 5 minutes. We have direct connections into accounting software like QuickBooks, where we can create a 2-year P&L and balance sheet in seconds. We have direct connections into the bureaus for business credit, personal credit, Dun & Bradstreet, business matching, KYC, KYB. Everything is done digitally using technology. And so from application to decision now is in 5 minutes. And we use your credit union's underwriting criteria. So we take your underwriting, we implement it into the Ranqx platform. And so what happens at the end is your loan officer gets a payload delivered to their computer with a decision based on your underwriting criteria and all of the supporting documents that they need to be able to support that loan. And so not only do we create that great experience, but then we have monitoring. And monitoring is really interesting. The reason we added monitoring is one of the things that we hear the most from credit unions is when they give a higher risk classification loan, the NCUA comes in for their annual audit and they want to see that you are getting financials and tax documents for those risky loans every year that that loan is live. And the number one complaint we hear from loan officers is you have no idea how hard it is to get those from businesses because the business already got the loan. They're trying to run a business. The last thing they want to do is annually give you financial reports and tax documents. Well, because of our API connections, we can give you those financial reports every year, and we have connections into the government for the tax documents. And so we can provide those for you. So now you're not spending time and effort trying to go after these businesses to get the information you need to do well on audits. It's simple. We're going to use technology and we're going to make sure you have it. And then the last tool that we're building out this year is called Cashflow Pro. Because one of the things that we know with small businesses is they need to understand their cash flow and they need to be predictive on what their future cash flow is going to be. So we provide this tool to credit unions, not only for themselves, but to actually provide to their businesses so that the businesses can see where their cash flow is going to be. But more importantly, the credit union can see it so that you might see that there's a seasonality where they have a dip in cash flow and you might be proactive in wanting to lend to them to give them that cash flow they need in order to sustain and continue that business. But this is a picture of kind of how the Ranqx platform works. So I know there's a lot on this slide, but really all I want you to get from this is to see that Ranqx is a SaaS platform. Your members are going to go to your website or your mobile app, and they're going to be able to enter the platform. They're going to enter just a little bit of information, which you'll see here in a demo in a second. And then we are going to reach out to whether it's Sage or QuickBooks or Experian or Equifax or Dun & Bradstreet. We integrate with Encino, Mambu, Abrigo, Alloy, Uplink, Plaid, Veritax. All of these things we are connecting to digitally and getting all of the information that we need to make a decision based on your underwriting criteria and then deliver all of that to your loan officers. So again, what typically takes 2 weeks because of all these connections, we can do in about 5 minutes. So what you're seeing here in green is the normal payload that we deliver to your loan officers. And in blue are the other things that we can deliver, but it's totally up to you. We typically deliver over 1,200 data points to your loan officers. Now, the average credit union uses between 15 and 24 of those data points, but you can have 15 to 24, or you can have all the way up to 1,200. So whether it's business credit, personal credit, decision analytics, accounting, the P&L, again, we can do business matching, person matching, we can do liens, bankruptcies, UCC filings. You're going to be able to tell us what you want, and we're going to be able to deliver that for you. And this is where all of that becomes really important. Instead of your loan officers having to calculate all of these different ratios and calculations, our platform's doing it for you and putting it into the decision. So whether it's revenue, gross margin, cash flow, capital ratios, quick ratios, debt ratios, equity ratios, the more important ones like debt service coverage ratio, expense cover ratio, all of these things are being automatically calculated and then actually delivered to you. And we can deliver them to you on a current month basis and on a rolling 12-month basis because we have access to their financial software. So just think about all of these data points and they actually just get deposited into your loan officer's laptop or desktop so that they have access to it through the Ranqx platform. And all of this comes standard with the Ranqx platform. So let me show you exactly how it works. Now, I'll start with, we were founded in New Zealand. So this is actually a New Zealand company. This is a New Zealand childcare company going to their cooperative. So you're going to see a little bit difference in date formats and phone number formats, but you'll still get a gist for kind of how the platform works. So what's going to happen is they will go to your website, your mobile app, they'll see the page, they're going to click apply now. That's going to come up and tell them that we're going to underwrite that loan, that they understand it, and they're giving us permission for that. And then they're going to tell us what's the name of their company. As they start to type it in, we do business matching. And so we're able to find their company. We're asking them if they're a director because we're connecting into the business matching. We know who the directors are. They're going to choose themselves. And they're going to give us a little bit of personal information. And this is one of the fraud prevention tools to ensure that they really are the person that they say they are. Because again, all of this information is associated with that business record. So they're just going to give us their date of birth, their email address, their phone number, and you're going to see there's just not a lot of information they're giving us because we're using technology to verify and validate who they are. Once they fill out this form with just that little bit of information, they're going to authorize us to run a credit check, and then they're going to submit that. Once they do that, we're going to ask them how much of a loan do they want. We're going to ask them what are they going to use it for. And then we're going to find out also how much of an investment that they have in it and how much unsecured credit they currently have. And again, we're going to validate all of these pieces of information. Once they submit that, we're going to connect to their accounting software. So in this case, Xero is very popular in New Zealand. So they're going to log into Xero. Now, we never get their login and password. When they click that link, it just takes them to their normal Xero login and password. They're going to log that in and they're going to get an authentication code. And what the accounting software is going to do is just give us a token to be able to go in and do what we need. So they're going to go ahead and allow us access to go into their accounting software, build the P&L, build the balance sheet, and we're going to go ahead and be able to do that. And again, you can choose as the credit union how long we have access. We can do monitoring for the life of the loan, or we can do it for 30 minutes. So that's it. That's the entire application process. This is the dashboard that your loan officer is going to see. They're going to see your entire loan portfolio. They're going to go into the applications for the Giraffe Early Learning. You can see where that shows up. He's going to click on that. And then when you look at the top right, you're going to see auto decision. So in this case, it met the underwriting criteria. The decision was approved. And you can see all of the documents that that person we were able to build and give to the loan officer for that specific client. Now, one of the other pieces of our platform is if they don't have everything, or if we can't do something, then they have the ability to manually upload the document and it'll go right into that dashboard for your loan officer to be able to see. And yes, we can send out reminders to the small business that their application is incomplete and they need to submit those documents. Now, Ranqx actually started out as an insights platform. So they actually started out creating insights for small businesses to help them run their business. And what they realized in doing that is where this information is the most important is actually when it comes to lending. And so one of the unique things, because we started out as insights, is that credit union staff actually find it 93% easier to enter into a financial discussion with a small business by using our platform. And so what happens when you digitize that small business loan process? Well, your loan book is going to grow. It grows because you've made it easy and you've made it seamless for your credit union members. But more importantly than that, instead of that business having to wait 2 weeks to get a decision and knowing that 70 to 80% of those loans are declined and then they have to go do something else after 2 weeks, you can give them a decision in 5 minutes and then they can react better and do more. Of course, we're going to save you 80% of that loan processing, 80% plus of that loan processing cost. So we take the cost of that loan application, again, $1,500 to $4,000. The average is about $2,500. And we take that down to somewhere close to $500. And so knowing you're declining that many credit applications, for example, we did a study with TDECU in Houston, and they saved over $1 million a year just in their costs of processing small business credit applications. And then we're going to provide you thousands of real-time data points. And again, you can use what you want and you don't have to use them all. But this is really where I think it really comes to life on the impact of small businesses. So for 2024, 77% of small businesses have confidence that they're going to succeed in today's economy. On the middle one, top plans for 2024, and the reason why working capital is so important: increase staff, invest in digital marketing, expand or remodel, invest in traditional marketing. And so they're using these funds to grow their business, but it's the right side graph that I think is the most important. And the reason for that is one of the things that we hear over and over from credit unions is they want to be able to attract Gen X and Gen Y. And when you look at 47% of all new businesses are Gen X. You want to be able to attract Gen X, offer automated small business lending. And if you want, what's really great is what credit unions like Michigan State University Federal Credit Union are doing is they are requiring the small businesses to move their banking relationship or their deposit relationship to the credit union to get the loan. So now not only are you lending better, but you're actually driving deposits and driving growth because you're bringing these small businesses into your credit union. And so really exciting stuff for us because we know when you can do that, you can actually make a difference with credit unions. We are currently raising some capital, and I'm happy to talk about that separately with any credit union that's interested. But with that, I am going to pause and see what questions I can answer. Amy, any questions coming through on chat?
Nothing in the chat.
Quiet group this morning. I know I covered a lot of stuff, but in summary, imagine the ability for your credit union to help a small business go from application to decision in 5 minutes, and your loan officers having to do no work other than review a dashboard. Like, it's game changing for you and for your communities.
All right, we have one question in the chat. Does Ranqx have a consumer lending side or just SMB?
So we are just SMB today. Now, my previous company was consumer lending. So I actually, it wouldn't be super hard for us to be able to translate that because all of the underwriting that we do will actually duplicate what you would do for consumer lending. So if that's something that interests you, it's certainly a conversation we can have. But our current focus is small business lending. And part of the reason for that is nobody is solving the small business lending problem, where there are some really good solutions that I can share with you for the consumer side.
Anyone else? All right, I think that's it for today. Thank you so much, Seth. This was so great. Thanks for your time.
Yeah, appreciate it. Thank you everyone for showing up.
Have a great day, everyone.